That's the word coming in from Seat. A fairly cautious note being sounded off. Margins might remain under pressure. Passenger vehicle sales will remain a bit muted. And talking about high competition in the export segment. Seat for now at 816. Let's shift gears then and talk a little bit more about earnings as well. Hinduja Global Solutions, the net sales up about 4% sequentially. Profit seen a good growth. Parthidiya Sarkar, who's the global CEO at Hinduja Global, now joins in. Thanks for being with us, Mr. Sarkar. Can you just tell us what was the overall volume growth for the quarter gone by, and are you seeing any traction across segments?
Well, the growth has been about 11.5% on a year-on-year basis. On a sequential basis, it has been about 4.5%. So the growth we are pretty happy with. In fact, this growth has been achieved on top of some consolidation that we had to do because we exited some clients which were not profitable. So if you were to look at net growth, that's the number. If you were to look at gross growth and we replace those revenues that we lost of the exit, so it will come to about 13%. What we are seeing growth, pretty much seeing growth across all sectors. We are seeing growth in Philippines, we are seeing growth in US, UK, Canada. We have started to see growth. Canada was a little muted in the first half of the year. Canada, we have started to see growth coming in. India domestic has slowed down a little bit. So I would say that across all sectors that we play in, I would say if you leave India domestic out, the growth has come in from almost all countries.
Mr. Sarkar, good morning. You know, we've seen some sequential improvement in margins. How much of that you think has come from execution of the better price deals and subsequently, of course, you know, we've seen an improvement then in realizations as well as utilizations?
Yeah, largely driven by better utilization, and as I also said, we did some portfolio rationalizations. We exited some clients which were not priced appropriately, and we've been able to replace, thankfully, we've been able to time it in a way that those client exits have happened at the same time as new clients have come in, which are better priced, and therefore we've not really had to incur any separation costs for some people. Therefore, the margin profile has improved on account of better utilization, on account of better pricing that we are getting from some of our clients. That's the main reason which is driving our margins up.
Given that the growth has been strong across US, Europe, the Philippines, what kind of momentum are you penciling in as you aggressively expand in each of the geographies in Q4 and beyond?
See, our typical growth has been in, if you look at CAGR of our business over the last 5 years, our growth has been 20% plus. I would say that at a constant currency basis, if you take it, we would still try and achieve high teens growth for this year as well. But that on a constant currency basis, obviously lower than what you would achieve if you were to report the numbers in rupees. But yeah, mid to high teens growth is what we are gunning for. Hopefully we should be able to make it.
Mr. Sarkar, let's also talk about your order book right now. If you can give us a sense of where it stands exactly and what have been the key client as well as deal additions during the quarter.
Our order book has really been strong because we have invested all along very strongly in sales and marketing. What has happened as a result of this is we've also had a fair amount of recognition amongst the analyst community. I think Nelson Hall rated us as the top player in the telecom industry worldwide. We made it to Gartner's Magic Quadrant. So all the brand visibility that has been created as a result of these investments have also resulted in a fairly strong order book. So if you look at order book today, I would say our order book in various stages of the order book is about $200 million of deals pipeline. If you look at what we have closed in the last 2 years, because we have had some exit, the number of net adds is probably about 3, but that's because we have had some exits that we were forced out of our system because we did not have the right kind of pricing with them. But I would say that just at an order book level at various stages, we have about $200 million of pipeline. So we are very bullish about growth. We have growth across all countries that we serve. Canada, which was a concern in the first half of the year, is picking up. So I continue to remain very optimistic about growth, and I think in our peer group we are probably one of the fastest growing companies.
And Mr. Sarkar, does that optimism translate into stronger growth as well for Q4? Because it seems that
Traditionally, our second half has been stronger on account of seasonality. That seasonality is driven by two factors. One is our big healthcare business, which is about 36% of our revenues. All the health insurance plans in the US go through a renewal process as of 31st of December. That drives huge amount of volumes. Also, healthcare reform is bringing in large number of first-time consumers of health insurance into the marketplace. That's about 30 million people who are coming in. As of now, that's the total market size. We believe that about 14 million new ads is what we would probably end up seeing. And that's also driving the volume. So quarter four also is likely to be strong so far as growth is concerned.
All right, Mr. Sarkar, we'd leave it there. Thank you so much for joining in and taking us through, what were the key highlights for the quarter gone by and how the future quarters might shape up. Wish you all the very best, in fact, for the coming financial quarters as well. That's Hinduja Global for you.
Thank you.
It's petered off quite significantly, you'd have to say, from the day's highest point. It had, in fact, crossed that 660 mark as well, but it's now just at that 636 mark. And the management, in fact, quite confident that we'd see much stronger numbers as well going ahead. Well, good time then to also bring on board our technical experts, Sandeep Agle as well as Prakash Gaba, right here with us. Gentlemen, good morning to both of you. And Sandeep, I want to just get in a quick word from you. First up on the Nifty, in the early morning show when we were talking, you said how things are looking wobbly for the markets. Just about holding on to that 86.75 mark for now, or would you still say that 86.50 would be where we